Welcome to the Fintech Nexus 5. My name is Peter Renton, and today we are going to be covering the top 5 stories in fintech this week, the week of September 11th. Kicking us off, we have the Financial Health Network releasing their annual trends report. This is a huge deal where they interview 8,600 people to talk about their financial health. The biggest takeaway, we find that the financially vulnerable population increased significantly as more and more people find it difficult to pay their bills. Fintech still has a lot of work to do in this area. The First Republic post-mortem is out from the FDIC. You remember First Republic was the third big bank to go bust this year, but they're actually the largest of all three. Now, the FDIC acknowledged that while First Republic doubled in size over the previous 4 years, during that same time period, bank examination hours dropped by 11%. They also said that the FDIC should have addressed risk factors such as interest rate exposure and the large volume of uninsured deposits at First Republic. The fallout from Square's outages last week continues. We now know that it was caused by DNS errors resulting from just a regular update to their software. It's been estimated that close to $1 billion of revenue was lost by Square merchants during this outage. Now, Square has officially apologized today for the outage, but no word yet on any compensation for the merchants that were affected. A real estate fintech launched this week called Roam. That's R-O-A-M. They raised $1.25 million of seed capital, and ordinarily this would not make the top 5 stories of the week. But the Wall Street Journal wrote about this company, and their article is the most viewed article on WSJ.com over the last 2 days. What do? Assumable mortgage loans. They take the hard work out of making this happen, and with tens of millions of loans, sub 4% right now, and new mortgages going at over 7%, there is a ready-made market for this. And while bank lenders may be reluctant to really do much about this because they'd probably rather do a 7% loan, it's an interesting idea and certainly a company to watch. There was a major fintech event late last week at the Philadelphia Federal Reserve. I was actually lucky enough to be in attendance at that event, where FedNow was discussed at length. Now, it's been almost 2 months since the launch of FedNow, and the response has not been overwhelming, shall we say. But Michael Barr gave a speech where he was adamant that there would be no federal mandates when it comes to FedNow. We're going to let the private sector duke it out. Aaron Klein of the Brookings Institution was not all that optimistic. He didn't see much in the way of payments changes in the medium term. Anyway, that's it for the Fintech Nexus 5 for this week. Thank you very much for watching. We'll be back same time next week. See you then.